Hello, and welcome to a brand new webcast on alternative investments by The Edge Singapore. I'm Amala Balakrishna, and I'll be your host for today's discussion on investing in wine. Estimates from investment consultancy Knight Frank puts the global market value of fine wine at 686 billion US dollars. Interestingly, the price of fine wine appreciated by 127% in the last decade, outperforming that of luxury handbags, colored diamonds, blue chip art, and rare furniture. This translates to wine investors having around 13.6% in annualized returns over the past 15 years. Joining me today to break down these returns and to tell us more about investing in wine is Anthony Tsang, CEO of Vinovest. Hi, Anthony. Welcome to the show.
Hello, Amala. It is a pleasure to be on board. So thanks for having me.
Thank you. So, Anthony, I must say the returns in investing in wine look rather impressive. So did you personally start investing because of the returns that the investment brings, or because you simply like to drink wine?
I'd be lying if I said I didn't like to drink wine, but I think like many others, I just was a very casual enthusiast, but I didn't really appreciate the investing in the finance side until reading that Knight Frank report. And that's really when the fire was lit inside me to want to collect wine, not just for enjoyment, but also for investment.
I think, the time seems to be ripe to start collecting wine because I'm seeing reports that pencil around a 5.8% CAGR for the global wine market between 2019 and 2024. So to me, it seems that the demand for wine is, growing. So what is exactly the factor that's driving the price and returns for wine investments?
So fine wine investing is really based on two main things. Number one is just pure supply and demand. Each year when a winery releases, they are at the mercy of Mother Nature, right? There's going to be good years, bad years, and that means that the harvest sizes can also vary. However, due to climate change, these harvest sizes are consistently getting lower when you look at it from a longer time frame. So you've got lower and lower supply, as you mentioned, with the CAGR growing 5-point-something% over the next few years, every single year. You have steadily increasing demand for those wines, leaving higher and higher prices.
So, it's interesting that the value of wine, I understand, it appreciated by about 17% between 2019 and 2020, and about 34% between 2020 and 2021. And it's really interesting to see from these charts that we have here that the returns from fine wine outperformed the global equities index as well as the Straits Times index in Singapore in the past decade. So maybe, Anthony, could you tell us what made this possible?
So what we've really seen is increasing globalization in the fine wine sector from consumers. Before, fine wine really was only enjoyed by really developed countries, Europe, even the United States is, I would say, a culture that does not enjoy as much fine wine on a per capita basis. But what we've seen is, especially in the last decade and a half, a lot of the newly wealthy Asian clients and collectors have really been a source of driving a ton more demand to these wineries. And because it is an agricultural business, because they can't physically squeeze any more juice out of a grape, even though there is rapidly increasing demand, that's what's leading to a lot of these higher prices year after year.
Right. So actually, Anthony, this reminds me of a common question that was sent in by our viewers, which is that, are wines in a price bubble right now?
I think there are, that's an amazing question, because if you look at the chart, it's been steadily rising. But if you also look at a chart in a longer time frame, give it 30, 50 years, you'll see that it also has been steadily rising. So for us, we see that every single year is leading to increased demand in certain regions. There's increased globalization amongst the wine market as well. Whereas 15 years ago, the prices were really just only in Bordeaux and Burgundy. Today, you're seeing more regions become investable, whether it be in the United States, whether it be in other parts of France, other parts of Europe, or even parts of South America. So when you're looking at the increased fine wine market prices, it's really led by fundamentals It's really led by an increasingly broader global market. And what we see with a lot of these wines leads us to believe that there will be continued growth for the next decade, decade and a half.
Right. So a problem that I think we are facing globally right now is inflation. So how do you think that with inflation being quite persistent across markets, how do you think it's going to affect the price of wine?
Inflation is something that affects all asset classes. Wine is definitely included in there, but in times of high inflation, it has proven to be one that consistently outpaces it. And I think that's for two reasons. Number one, it is a hard asset. It has utility, right? People can drink it, consume it, enjoy it, as well as invest in it. And the second is due to that supply and demand constraint. Because you can't just physically make more wine like you can sometimes print more money or even issue more shares, that leads to be more deflationary nature when you compare it to other equities or just fiat.
So Anthony, earlier in your discussion, you highlighted about climate change when more wine is produced. And I think that's a concept that really resonated with some of our viewers, because there was a common question on how does the shift towards ESG and sustainability impact the price of wine? So maybe could you tell us a bit more about that, please?
Yeah, so as I mentioned, a lot of the major wine growing regions are getting warmer on average. So this means that they're producing less and less, which is spiking up the prices. Also, what that means is that regions that previously were maybe considered too cold to produce world-class wines are now becoming more and more popular. So they're up and coming, and in my mind, where one door closes, the other opens. So you're seeing really great wines being made in colder regions, the southern tip of South America, now kind of more northern states in North America and United States, and even parts of Canada. And you're seeing the same trend in Europe. A lot of the great wine is starting to be grown in regions that previously were too cold, in parts of Germany or northern France as well. So this represents a lot of exciting change and opportunity in what is normally a pretty slow moving and stable market.
Right. I mean, honestly, Anthony, my informal observation is that the thirst for wine has been growing, especially in Singapore, with more people here attending tastings or even taking up appreciation classes and workshops. However, a common comment that we received from our viewers was that wine investing comes at a very steep price. So many of them are very hesitant, or they are not very sure on how to start or whether or not it's something that they should start, especially at this time when the economy isn't doing as well as before COVID. And I think another area of consideration is that the value of wine that is stored in an average wine cellar, after taking into consideration the price of installation as well as the value of all the wine that is stored in the cellar itself, is around $33,000. So how can our viewers actually start investing in wine? Should they just pick up a bottle at the nearest supermarket and then just start investing like that?
I wouldn't recommend that. And I think you're touching on a very important point, is that there's such a high barrier to entry to become a wine investor. Even if you look at my Zoom background, right? A wine cellar like this would cost over $50,000. And that's just the infrastructure of setting up the right shelving, the right temperature control, the right humidity control, and being able to even do all of that before you buy a single bottle of wine is unattainable for most people. And I felt that way too when I first started wine investing, which is why I started VinoVest. So our platform is able to abstract away a lot of those common barriers of entry. We handle storage, we handle authentication, we handle shipping. So anybody just with a smartphone, no matter where in the world they are, can get started without having to worry about a lot of the physical infrastructure that I think leaves wine investing today as only available to ultra wealthy people.
Right. So Anthony, just now you mentioned a little bit more about the wine bottles itself, but how about scooping up units of wine stocks like Truett-Hurst, Constellation Brands, or Diego? Is that something that it's timely to scoop up right now?
So I would say scooping up wine stocks and investing in wine bottle are extremely different. Stocks will still go up and down according to major macro factors, whereas wine bottles have a very low correlation with the overall stock market. So for example, if you're investing in Constellation, you're investing in the business operations, right? That includes the winery, that includes the shipping, that includes selling it to customers and everything in between, right? You're investing in the company and the people's competence to run that company. When you're investing in the bottle, it's much more simple, right? The bottle's already in production. It's zero cost for you to acquire. And what you want to do is be able to hold on to it and age it for that next consumer to enjoy. So in my mind, they're very different things. I think both deserve consideration in somebody's stock portfolio or overall investment portfolio, but it's for very different reasons.
So I'll come to you on how a viewer can construct their portfolio to include investments in wine in just a bit. But just hearing you, I'm a bit confused whether I should start investing in a bottle of wine or whether I should pick up units of stocks. And I believe that it's for confused investors or investors who are on the fence on how to go about doing wine, that you have started a new fund that is benchmarked to the Libex Fine Wine 1000 Index. Am I right to say that?
Correct. So yesterday we just announced the fund.
Yes, maybe could you tell us a bit more about this fund, please?
Yeah, so our fund is for professional investors who are looking to get broad exposure and diversification into wine as a fine asset class. So we're able to work with RIAs, family offices, other broker dealers, and professional money managers in creating a structure that makes it very easy for them to be able to deploy wine as a part of their clients' portfolios, just like they would a stock. So that's what our fund is for. And we're really excited because it's really been driven by a lot of our investor demand in wanting something shared. So the main difference between investing in the wine fund on VinoVest and investing on the retail side platform is that on the wine fund, you're ownership in a structure that owns wine, right? So you're not directly owning the wine, you are owning a fraction of everybody's wine. What's happening on VinoVest is you directly own your own bottles, you have your own portfolio, and that means that you have full ownership and control over which bottles you own, and also if you want to ship it or drink it or have any sort of benefits that happen with the utility of the bottle. So those are kind of the two key differences for investors looking for different ways to get exposure to wine investing.
So Anthony, how does the returns provided by VinoVest compare to that given off by the bigger wine investment platforms?
So our returns last year were just over 19% on all of our wines. And the year prior to that, it was 17%. So we've been able to deliver steady double-digit annualized returns, which is what we strive to do. And we are able to do all of that while maintaining, I think, a really easy to use technology platform. And our goal is really to make it accessible for the new wine investor. We're really not made for wine collectors. We're made for really the next generation of people who may be confused or may be apprehensive on how do they actually break in.
So I'm speaking to those investors right now by asking you, how can these viewers and these investors construct a portfolio that includes wine?
So when you look at any overall portfolio, I think where wine fits in is as a diversifier. So it's something that doesn't move along with the stock markets or crypto or real estate. It deserves its piece alone. And because of its long-term nature, because it has about a third of the volatility of a stock market, what it can do is really counter a lot of the risk that you're putting on by investing in stocks, by investing in crypto. So that's really what we see. The main usage of wine in somebody's overall portfolio is they want it as a hedge.
So are there any key risks that come about with investing in wine?
I think the key risks in wine is the actual storage component, right? You're dealing with something that is physical, that is fragile, and actually can be damaged and go from its value, go to zero if it's not stored properly. So at VinoVest, we work with professional wine storage providers, ones that hold tens of billions of dollars worth of wine, and they not only authenticate it, store it, they have 24/7 security, humidity monitoring, temperature monitoring, as well as shock monitoring as well. So this wine is essentially in an indestructible vault. And even if something happens to it, we put on very robust insurance coverage to make sure that you're able to be fully made whole when there is that sort of freak accident that happens. So we really care about protecting the investor because this is the biggest risk, right? It's the storage risk. And by taking that away, we're able to then offer, I think, a lot more comfort to our investors, especially when they would not be able to manage the storage themselves.
Right, Anthony, I think comfort will also come from in the form of knowing that an investor is actually the owner of the wine itself, right? So even if anything happens to Vinovest, they will still have ownership of that wine, right?
Exactly. So that is, I think, why a lot of individual investors really love our model is because they actually own the wine, right? Regardless of if Vinovest operates, they can still go to that warehouse, redeem on their wines, and do whatever they want with it at the end of the day. But many still trust us with that custodying process because we have the expertise on being able to access the wines, being able to help them build their wine portfolio, and eventually help them sell that wine portfolio.
So Anthony, understand that Vinovest is not regulated at this point. So maybe could you share a bit more about your plans for your platform in the
Yeah, so wine investing in general is an unregulated industry. That's why there are a lot of bad actors out there. Things like showing you legal ownership of your wine, things like offering robust insurance coverage. These are things that any investor, I think, expects in a traditional investment. And that's why Vinovest has to almost self-regulate ourselves to a higher standard than the rest of our peers so that we can bring that trust and comfort in there.
Right. So maybe before we wrap up our discussion, could you just share with me, like, what are 3 things that our viewers should look out for when they start their journey in investing in wine? Personally for me, I was always thinking that, it's better to hold the wine because, as, investments might age just like, like wine ages. So is it better to keep it longer, or what else should our investors do?
Yeah, I think when diving into any investment, look at where it fits into your current holdings. Look at how much allocation you want. And I think you touched on a good point in that what is your time horizon, right? If this is something where you need the money in 2-3 months, wine investing probably isn't the right fit for you. But if you're looking at this as a long-term, maybe 5-10 years, then that's when you can really enjoy long-term diversification benefits with wine investing. So that's what I would really part our investors with, is coming in knowing what you want out of the right expectations. And then I think you'll be able to find a solution that's tailored for you with Vinovest.
All right. Thank you so much, Anthony, for the great tips. So with that, we have come to the end of our webcast on wine investments. To our viewers, we hope these strategies help you in your investment decisions on how to invest in wine. For more analysis on alternative investments, you can visit the websites of Vinovest or The Edge Singapore. Do like us on Facebook and Instagram to be alerted on our upcoming episodes and webinars. Once again, I'm Amala Balakrishna. With me is Anthony Chang. And take care. Cheers.